Welcome, folks, to this episode of Investor Diaries. So, as we close off this year, 2020, and what a year it has been, we thought we will close off with some of the few dividend names, some of the few folks out there who might be looking at investing in dividend or value stocks for 2021.
Yeah, so thank you, Nidish. I hope everyone's keeping safe. We're towards the end of the year, and so we tried to come up with 3 names which we thought were the most apt given where we are at in terms of economy. And we'll kick it off with our first stock, and that's Johnson & Johnson. Now, Johnson & Johnson is one of those blue chip stocks that's been paying dividends forever now. And I said forever because they've been paying dividends for 58 years. In fact, they've been increasing their dividend every single year for the past 58 years.
That's great. That's great, Happy. In fact, Johnson & Johnson is a very well-known household name for a lot of us. A lot of viewers out there would also recognize it as one of the makers of Band-Aid and consumer products like Vino, etc. So can you tell us a little bit about the company, what the company is all about before we move into the financials and dividends?
Yeah, absolutely. So Johnson & Johnson, it's a mammoth company, but overall we are talking about 3 business segments. We're talking about a medical devices segment, a consumer segment, and a pharma segment. So a pharma segment would be something which is right now working on COVID vaccines. Yeah. Consumer segments, we know about Band-Aids and Tylenols, which you find at pharmacy stores. And eventually we are looking at the medical device segment.
So most of the folks, most of our viewers would be looking at dividend deals when they want to get into value names. So, Happy, can you tell us a little bit more about the dividend, the history, and what our viewers can look to gain from a dividend yield perspective from the stocks?
Yeah, absolutely. So as far as dividends is concerned, we'll speak from yield. Right now, as we are recording, and it's providing a dividend yield of 2.8%. Now, the first question that can come to your mind is, well, there are a lot of companies that are giving me dividends more than 4%. So why are you even recommending Johnson & Johnson? So it is because Johnson & Johnson has proved over the past 58 years that it can provide dividends, and it can provide dividends sustainably. So right now, in the previous quarter, its dividend payout ratio, that is the portion of earnings which the company uses in providing dividends, was about 46%. And 46% is a very healthy dividend payout ratio. That's one. 2020 has been nothing short of an unprecedented year. And even in this year, in the month of April, they actually increased their dividends. So they were paying a dividend of 95 cents a quarter, and they increased it by 6.3% to 1.01, which was of course payable in the second quarter.
For our viewers or investors who are looking to invest in this company and rely on the stable dividend income, I guess this stock is a great opportunity. Apart from that, I'm also thinking, like, once there's news that J&J is working on the COVID vaccine, and once they come out and release the vaccine and it's successful, FDA approved, there might be some growth in the stock as well. So maybe our investors can hope to reap some benefits out of that.
Absolutely.
As well.
Absolutely. Like, this was such a key point you made, Nidish, because if you were to just run after, say, the yield, then you can go to a REIT, which is a real estate investment trust, and you can kind of get like 7%, 8% yield. But is that yield sustainable? The answer is no. And second of all is, Johnson & Johnson is one of those rare companies in which over a period of time, you will see that the stock price also increases. Yeah. And this is where investors can draw confidence that they will be able to see some capital appreciation. So they can make some benefit when they're selling the stock. But from a dividend perspective, it's definitely one of the best.
Thanks, Happy, for all the insights about this. Any concluding thoughts before we move to the next stock?
Yeah, I would say if you were to buy Johnson & Johnson stocks, then feel extremely confident that you are buying one of those blue chip companies which will continue to serve you, and it will continue to provide you with quarterly dividends, which increases every single year.
Okay, that's great. So J&J folks, keep that in mind for as stock to watch out for 2021. Now let's move on to our next stock that we are analyzing, and the stock number 2 is that we're suggesting is Appy. Do you want to do the grand reveal?
So the second stock is Pepsico. Pepsico is a great company, and it's not only a beverage company.
Right.
In fact, it generated about 46% of its revenue in 2019 from beverages and 54% of its revenue from snacks. So when we spoke about J&J, we spoke about the pandemic just a little bit, but think about it this way, that during the course of the pandemic, a lot of companies have suffered. But for Pepsi, they hadn't suffered as much because they're also a snack company. So a lot of people are kind of staying at home, buying snack, eating snacks. So this is why, this is also one of the reasons we are recommending PepsiCo over Coke, because Coke is more of a beverage company, right, whereas PepsiCo has a more diversified business.
Right, right. And that's a very interesting perspective. So I'm assuming because of the COVID, definitely PepsiCo has an impact because of the restaurant closures and their partnership with the restaurants. But on the other hand, a lot more people are probably, because they cannot go to restaurants, are probably going to grocery stores and shopping more than what they used to. So would you be able to give us any COVID perspectives on how that has impacted this? I know you also want to talk about dividends, but let's talk about the COVID perspectives and then move to the dividends.
Yes. So we'll start with a few brands that Pepsi owns, and I think that's going to give us some more perspective. We have Lay's, we have Doritos, we have Tropicana, Gatorade, Quaker Oats. All of these are within the Pepsi brand, which kind of people do not always know if it belongs to Pepsi, right, but here you see the impact of Pepsi. I for myself, you know, when I go for grocery shopping, I definitely pick up snack.
I will also confess here, I love potato chips. So some of these brands are one of my beloved or favorite brands as well. But apart from being a consumer of the company, let's talk about how investors can look to gain or seek to gain by buying the stock. So let's dive into the dividends and the financials a bit.
Yeah, absolutely. So PepsiCo pays an annual dividend of $4.09. And if you look at the stock price now, it's tending towards a dividend yield slightly north of 2.8%. 2.8 might not seem as high as some of the other dividend names, such as say REITs or some of the other companies which pay out dividends north of 5-6%. But again, this is extremely stable. They've been paying this dividend, in fact, increasing their dividends for the past 48 consecutive years. And in this company, they're paying about 70% of their earnings out as dividends. So a little higher than that of Johnson & Johnson, but still the company has had an impressive track record. They've been able to increase their dividends. And that's why I have no doubt in my mind that this is a great stock to be in anybody's portfolio, which is going to give them a regular income.
Okay, that's great. Any concluding thoughts before we move on to our third stock?
The stock has come back to the pre-pandemic levels. The stock price did see a little bit of a dip during March of 2020. So here as well, just like Johnson & Johnson, you can rely on the stock not only to give you dividends, but over a period of time, it can give you some capital gains as well. So if you were to sell the stock, which I don't recommend selling at all, like this should be table stakes in your portfolio, and you stand to benefit in the long run, Nitish, if you were holding PepsiCo.
Yeah, so that's great. Thanks for those inputs. So viewers out there who love these brands, love Pepsi brand, we would totally recommend buying the stock, and you can leverage the dividend yield to buy your favorite next bag of Lay's as well. So now let's move on to our third stock that we're recommending in this dividend episode. So Appy, would you want to reveal let's do the grand reveal of the third stock that you recommend?
Absolutely. So we looked at a pharma company, then we looked at Pepsi. The third one is a bank. It's Jpmorgan Chase. Now, it's the biggest US bank by market value. And if you were to hold one bank, I would recommend that you hold Jpmorgan. During the course of the pandemic, they continued to pay out dividends in spite of the difficult business operating circumstances.
That's great. So again, Jpmorgan Chase is a very well-known brand, particularly in the United States, and a lot of folks who are big on credit cards too are huge. There's, I think, a kind of like a cult following for the Chase Sapphire Gold card as well.
There is.
So so let's dive into a little bit more about this. Would you like to give a little bit more about the company? What are the business segments they operate in before we dive into the financials and dividends?
So Jpmorgan Chase, when you spoke about it, one thing that comes to my mind is its CEO, Jamie Dimon. When Jamie Dimon speaks, the world listens. And as far as the company is concerned, like the stock price was at about $141 pre-pandemic. It went down to $76. And if you see, it's actually started coming back again. Just last week, the company announced that it is going to do share buybacks worth $30 billion, which means that the company thinks that its stock price is undervalued. So I think for all the viewers out there, if you are looking to get a bank stock, Jpmorgan Chase should be a no-brainer.
Okay, that's great, Appy. Let's talk a little bit more about the dividends of the Jpmorgan and look at it. Let's look at a financial snapshot of the company as well. So would you like to take it off?
Yes. So Jpmorgan right now pays an annual dividend of $3.60 per stock, which translates to 90 cents per quarter. And when we look at it from a dividend yield perspective, right now as we speak, it's at a dividend yield of 2.85%. And it's varied because the stock price has been fairly volatile. But even during the pandemic, they maintained their dividends. And that's why it gives people like us a lot of confidence that if the pandemic could not do anything to the dividends of Jpmorgan, there is hardly a circumstance that's going to arise which is going to lead Jpmorgan towards canceling their dividends or reducing their dividends. So as far as I'm concerned, it's a great stock. And then if we look at Jpmorgan's dividend payout ratio, and that's an important stat because the dividend payout ratio is close to 36%. It's 34.35 to be precise, which means that out of its total earnings, it's only 1/3 that they are paying out as dividends, which means they're sitting on a pile of cash right now and they can continue to pay out dividends even if they had losses. So I think Jpmorgan is a great stock to have as dividends. Similar to Pepsico and Johnson & Johnson, the stock price of Jpmorgan is going to continue to grow. The dividend is going to continue to increase. And if you are looking at one of those bank stocks, Jpmorgan should be the first that you should be going towards.
Any concluding thoughts about Jpmorgan or about the three stocks that we reviewed for all of our viewers out there listening to this from home?
Out of this video, if the viewers can take away one fact, and that is whenever you're looking at a dividend stock, just don't look at what is the dividend yield.
Right.
Look at if the company is able to pay out that dividends over a period of time,
right.
What's the business model, and then do a fair bit of research yourself before buying a dividend stock. As far as I'm concerned, these three represent the best of the breed as far as American economy is concerned, and we should have no hesitation in buying any of these three stocks as dividend stocks.
Okay, that's great. So to conclude, we reviewed one dividend stock each from different sectors. So if you had to pick one, we would recommend picking one of those three. But if you are big on dividends and you can afford to buy three stocks, you could go ahead and splurge on all three. So that's all we had for this segment or this episode. Stay tuned for more insights and more episodes coming your way.
Thank you.
Thanks.